Hi everyone, this is Mark Villapaso, an FX instructor. Hi admin. If you have any questions, feel free to just post them at any time. Meanwhile, I think we can get started. Thank you. Hi Rashid. Alright guys, let's get started. Let me switch to daily charts and then let's get started. So folks, we're supposed to cover the ECB's decision today, but frankly, I look at I hear the news, I look at what's going on, and I tend to think that this is one of those ECB decisions that will basically be a dud for us. We don't expect anything new out of the ECB at this point. No new tools, no new statement, no new way of thinking, which is one way of saying that I think it's going to be boring. We are not going to get any changes in policy. We just had the rate cut after all. So if that's the case, what do we do? Well, we still can listen to Mario Draghi during the press conference 45 minutes after the decision. And if President Draghi will sound more dovish, then that, of course, will give us an excuse to think in terms of, can I get my euro to ease off? But beyond that press conference with ECB, beyond listening to Draghi, we doubt that the actual decision itself will be a mover. But of course, let's just play with theory. In theory, any decision to lower your interest rates, or any decision to introduce any form of quantitative easing, meaning hand over money to the private sector, will have the effect of weakening the currency. And that is the more likely change, if change were to happen, rather than the opposite. The opposite change being the ECB decides to raise rates or curtail money. That's very unlikely. That's almost impossible. So again, we don't expect anything, but if they do something, it will be to provide liquidity, and that in turn will be an excuse for the currency to weaken if they do something. So that's that. Let me just do a review of our chart and let me see where exactly do we stand in our euro now. So where do we stand, folks? If you look at your euro from a really, really big historical perspective, where do we stand? I guess we are just under your, relatively speaking, just under 2-year highs. Your 2-year highs was established when? 2-year highs being established around September. If you look at your weekly charts, you have a high wave candle in the making after a 3-candle situation of bounce. So what does that imply? It implies that momentum has been lost for the top side. And if we go intraday, or rather intra-week, if we go dailies, what do we get? You've had indecision. A sell-off, and then a rally, and then an attempt to sell off, which ended up closing with a very small body. You attempted to rally up, and now here you are. You couldn't hold on to the gains. You quickly eased back down below your R1, and you've got a small body now in your daily candles. So what exactly am I saying here? I'm saying that the fundis are something that we can forget at this point, since we're not likely to see changes in policy. Let's focus on the technicals. And if we do that, what we are getting out of the technicals is we really don't know where things are going. We've got a market that is indecisive. But having said that, there are still things that we like. I like the idea of a failed attempt at a bullish breakout. So I can now argue a rejection from 61.85, a rejection from 36.30. What else? Indicator-wise, you seem to be bullish still in your dailies. If you go intraday though, what are you getting? A mixed view now in the 4-hour picture. Stochastic finally coming off overbought areas. A shooting star in one of your previous 4-hour candles. Hourlies, what do I get? A confluence of bears. So if I were to do something, what would it be? I'd focus on getting rejected from your R1, your 32, your 36.22 region. So folks, as far as your euro is concerned, we are bearish. We'd like to get a rejection from 36.30. Our objective would be to ease down to your daily EMA lines. However, we're not in a hurry to take action. This is European midday, and despite us disdaining the idea of a ECB decision, we do still have to look at those numbers. And listen to the press conference 45 minutes afterwards. So the fundis are there. And from the technical perspective, we have a bearish bias. E4X 101. Wow, that's one nice pair to look at. Well, we have to remember that Aussie's weak. And with a weak Aussie, we find ourselves with that surge in your EUR AUD. Well, let me clean this up. And let me see the big picture here. So where are we? We've already pushed through previous swing highs. On a weekly scale, you're set to close above that previous swing high. You're set to close above 1.5. So you seem to be opening the way for us to think in terms of this. This is your sell-off from 2008. And where are we? Just getting to 38.2 fib retracement. You know, this is interesting. Average range for the pair is about 144 pips. Okay, that's not good. Your value per tick is only 0.9, so basically $9 per pip. I guess that's why there's not much players here. So, fast approaching 38.2 fib. Your projected high is 51.59. 38.2 fib is at 52.05. So that's actually something that we might want to respect. But let me see what else we've got. Confluence of buys as far as indicators are concerned. Dailies, another confluence of buys. For our picture, confluence of buys again. Hourlies, you have a bearish MACD, your stochastic is heading for oversold territory. So what can we do? What do we know? Well, we know that Nick, I don't really see a bearish divergence. You're pushing higher in your stochastics. So I don't see a divergence here. You're trying to push back up in your stochastic. Now, if this latest stochastic were to cross lower, now that would be my bearish divergence. And I think that your rally is lost momentum and may ease off. Okay. Well, we're looking at the daily indicator, so let's look at it. So what do we have? New highs so far for the day in this decisive candle. We've only seen 86 pips of price action. Average change is 144. Projected high 51.59. What would I suggest? Folks, if you look at your chart, you find that you've been seeing whipsaws. Here's one whipsaw. Here's another. And looks like we have another one here. So one of the things that I would like to do is, can I take advantage of that latest whipsaw that's forming? I would have loved to buy from $49.99, but if I don't get there, given that you have your lower highs, or rather your higher lows, I should still be looking for another buy from just above this area, just above your 1.5013 region, and just place the stop loss around your $49.99 level. So as far as EOAD is concerned, I think our strategy has to be just get some buy on dips. Remember that on the one hand, the RBA is trying to weaken the currency. So this could just be the start. And I would suggest people look at the weekly charts. Well, thank you for bringing it up, Anand. I mean, this is something that I'd be interested in to play with as a long-term position. The only problem is you have to pay swap if you buy EUR AUD in the long run. Okay, folks, let's move on. And let me get back to overview. Let's see where we can go to next. Let's take a look at our euro-yen. Still a euro pair. Still could be affected by the ECB's latest decision. Although, as we said, we don't really expect anything out of the ECB. But let's see what we've got for EUR-JPY. So what have we, guys? We've had indecisive candles in euro-yen. Your previous day's candle actually eased through your support. What else? So topping off in your price action, a lot of indecisive candles there, suggesting daily momentum has been lost. Topping off in MACD, stochastics are dropping. For our picture, in a confluence of bears once more. Hourlies. You've been trying to crawl to oversold territory in your stochastic, and MACDs are down. So guys, what does this mean for us? Bias for Euro Yen is to actually look for weakness. I know. Weren't we just looking at EUR AUD and saying EUR AUD is a buy? Well, that was EUR AUD. And Aussie is really the weakest of the majors right now. So guys, what do we do here? Things to watch out for. We've had a sell-off in your equity markets earlier in the week. That sell-off really hasn't translated itself yet in your Euro Yen, so that's something to consider. The possibility of us having a push to your S1, your 38.50 price point. So guys, I look at our Euro Yen and I'm thinking, where's the bottom? We have a mean reversion risk in the making. A break of 38.71 for us on a daily basis will be an excuse for a bear market. Alright guys, but best to just wait for the ECB decision. Of course, if there is a decision by the ECB, if there's any surprise for us, it's going to be for weakness, and that's just going to add to the idea of of topping off. That's just going to add to the idea of can I ease, can I pull back to my 21-day EMA at 36.98. Alright folks, let me get back to overview. So for now, we really just have to wait. Just have to be sure that nothing surprises us. Although if there's any surprise, it will be to the detriment of your euro. It will be an excuse for you to think, can I see a pullback down to my EMA lines? Let me just get back to overview, guys. So what else looks interesting? Any questions? Let's take a look at your euro pound. Euro pound is something that we really ought to think of, especially if you're thinking strategic. Why? Let's put it this way. What has your cable been doing lately? Been going up. Okay, let's get back to euro, then we'll go euro pound. The thing about euro is that you have this high wave, you have this long wick already in the dailies. You had a failure to stay above your R1. We are well short of average ranges, so I would still want to see a further action. I'd look at the break of your pivot. I would look for a sell-off down to your 35, 45 price point. I'm not saying that we're going to get a one big bear market. We've been consolidating in our euro. The only way to get one big bear market will be if we hear announcements about willingness to cut rates some more. So, to me, bias is to just see this push back well inside your previous congestion. It starts with us getting a bearish announcement, which I doubt. So this just stand aside for now. But you push to your pivot, push to the lows, and you've got your bear market likely getting started. Now let me take a look at Euro Pound. I actually like Euro Pound because it's pretty similar to your ERAD. ERAD, we're talking about your ERAD pushing higher. But in EUR GBP, we'll be talking about your Euro Pound selling off. Why is that? Again, we've been getting a lot of good numbers out of the UK consistently over the last month or so. Those strong numbers from the UK would be a good excuse for people to think that the ECB will no longer need, or rather the BOE would no longer need to keep their APF facility. So all of that points to us having a stronger GU. And if I look at our charts, what do we have right now in Euro Pound? Well, we actually have a weak GU according to EUR GBP, but we're approaching some nice resistances. Okay, you are approaching your 83.30 area. You're just around your R1. So you may have buy signals in the 4-hour picture. You may have buy signals in the hourlies, but I'm thinking let us look for signs of weakness. Let us look for hammers, or rather shooting stars, just around your 83.30 region. So guys, something to wait for, to look for, the reversal of your EUR GBP. Your 83.30 level would be a good candidate for this. You don't want to short immediately. You want to see hammers or shooting stars or hanging mans before you actually do anything. All right, folks, we're 5 minutes from the decision, but again, we don't really expect anything. George, candlestick is nothing. Is that what you mean? Is that what you're saying? Well, that's interesting. Why are candlesticks so popular? Okay, I hope nobody minds if we digress a bit. Why are candlesticks so popular? They're very popular because supposedly the guy who developed them at that time, back in the 1600 Japan, would be the equivalent of today's Bill Gates. I think we should talk about it. If you're someone who's a classical candlestick chartist, you look for shooting stars, you look for abandoned babies, you look for evening stars. They're not that useful. I would admit that. The candlestick patterns are not as powerful as they used to be. One thing though, candlesticks were also developed primarily at a time when there was no real-time market. So they're more effective when used in the higher time frames. Yeah, Nick, I totally agree with that. You have to have a confluence of tools telling you this is what's happening in the market. Well, George, that's true. And as Nick has pointed out, you shouldn't use them as their sole basis of analysis. As for me, I intend to really look for candlesticks, especially shooting stars, hanging mans, hammers. I tend to focus on them, but in the daily charts. I also look for them whenever I see support coming up or I see resistance approaching. It's always nice to have a single candle reversal pattern, shooting star, hanging man, or hammer, when you find yourself at a previous high as well. Because that increases the probability of you being correct when you decide, I'm going to sell this because I am around the highs. And then I have a shooting star in my candle. If you try to do that kind of logic, you add in more pieces of information, then I would say that's even better than the red line crossing the blue line trading. Yeah, I'm sure a lot of you folks are familiar with crossover trading. But it has to be in the context of support resistances, knowing how big price action already is. I don't know, maybe we can have a session, I'll talk to that actually, about what I call Moneyball trading. Basically, you include statistics in how you make decisions. Well, yeah, you've got a very indecisive set of candles here. I think if we were to close though back around the lows for November, that ought to be a good excuse for us to be confident about, hey, we've got a bear market already. At the end of the day, we still have to consider that Fundi's rule. Sure, it was nice that you had a shooting star, and after your shooting star, you did sell off a bit. You didn't get a nice big bearish reversal. Thank you, FX Rodan. So, folks, you have an as-is decision. We didn't even, I didn't even monitor it that closely. But thank you. The important thing really now is to wait for the press conference and see what Mario Draghi is going to be telling us. Now, back to candlesticks. So what do we do? You have your shooting star. You try to sell off. You failed. However, I could argue that you did try to sell off already. There are bears in the market. Now, in this next month, December, can we get those bears to come in again? For that to happen becomes a question of, do we have a catalyst for them to do so? What could be the catalyst for bears coming in? Well, if you get more data that says the U.S. is likely to taper soon, if you get more data that says the U.S. is doing great, then that would be an excuse for us to expect your euro to creep slowly back down again. I've always tell this to myself. If you want significant changes in the price levels, there has to be an external catalyst. There has to be reason, whatever that is. It could be a change in policy. It could be a slew of bad economic data. But there has to be an external event to change the way people think or the way people value the currencies. Without external catalyst, then we cannot expect a big move. So going back though, as far as our candlesticks are concerned again, they tend to be more powerful in the higher time frames. You don't want to use them by themselves. One problem with candlestick charting is they don't really focus on support and resistances. That's one weakness of candlestick charting. So you have to be aware of that. If you know how to figure out support and resistances, try to look for turning points. Remember, candlestick charting is great at determining reversals or trying to figure out when is the market reversing. But projecting just how high, just how low the market can get is not one of the fortes of candlesticks. It's about where's my support and where's my resistance level. Because I'd expect things to push all the way up to that resistance or all the way down to that support. So, at the very least, you try to combine candlestick charting with support resistance concepts. That should improve your hit rate. All right, let me get back to overview. Is there any chart that you'd like us to go into, folks? Or any other issue that you'd like us to look into? Looks like for now you have a really mixed performance here. Ooh, one of my favorites now. So Aussie's been bearish. Why is it? Actually, I was disappointed with Aussie. Earlier in the week, we had the RBA talking with their own decision, and I was expecting that they'll say something about willingness to intervene in the markets, but they did not. That said, what do we know? We have the RBA with a policy, or at least with the idea, or with a desire to weaken the currency. Why do they want to weaken the Aussie? Because Australian growth for the last couple of years has mostly been about the resource sector, about mining. And over the last 5 years, Australian manufacturing has contracted. It used to employ 1,000 people. It now employs only 700,000 people. So, because of this, the RBA has decided to try to, or to look at the potential for intervening, the potential for weakening the currency. Now, that said, what do you have? Technically, you have a head and shoulder triggered. The head and shoulder goes all the way down to 8,800 as its target. What else? Break of your 9065 support. You have a high wave candle so far for the day. Confluence of bears in your indicator. Look at this. You've been just under your pivot. So I'd look at any push to the pivot as a question. Can I ease off from the pivot again? If you go intraday, what are we getting? Confluence of bears once more. MACD is down. Stochastic for the bearish crossover. Hourly. Bullish stochastic and MACD that's your MACD is at risk of crossing lower. So there's no clear direction, but we remain below the congestion floor from earlier in the week, from late last week. The fact that we've stayed under 90.56 says something, says a lot. That we have a valid bearish breakout, and we ought to look for more downside. So we can consider sell some 90.55, or if you have a break of your 90.03 price point. So Aussie, we got a bearish view, but it doesn't seem like we're in a hurry. Let me take a look at dollar CAD. You know, it's been a while since I've actually seen dollar CAD. Let me clean up my chart. One thing that's going against the commodities is that you've got that Iran deal, you've got oil prices beginning to ease off. So your commodity currencies are really getting hammered as well. That said, where is your dollar CAD? Let me see, folks. Is that a monthly head and shoulder? Inverted head and shoulder in the monthly scale? Maybe. Certainly looks like it. This could be your shoulder. This would be your head. This would be your shoulder. But that's a monthly chart. Let's not mess with the monthly chart. But let me drag some fibs. Oops. Not. So this is your sell-off since 2009. Zoom in a bit. So inverted and shoulder in the monthly. Weekly scale, you have a triangle breakout. With dailies. So a bit of a pullback day today. Overall bias has been bullish though. So as far as dollar CAD is concerned, folks, overall trend is bullish. You may be pulling back today, but I would view the approach of your supports, the approach of S1 at 106.44. As us possibly getting into a bounce off point. Alrighty, let me get back to overview, folks. And if there's any chart that you'd like us to go into, just bring it to our attention. So, for the moment, our event was a dud. Again, we really didn't expect anything anyway. We were already surprised last time out. And central banks normally do not do back-to-back rate cuts unless they're panicking. And I don't think that the ECB is panicking. So going forward, the thing to do would be to just listen to the press conference. Any talk. I would see that as unlikely for today. if we close where we are, I think that our highs earlier would be it. That attempt earlier would be that. Alright guys, you always look at for me, you always look at the daily chart to identify the primary trend, unless you're a very long-term trader. Okay, I would focus on the dailies to identify the primary trend, and then you switch to the intraday, your hourly charts, to try to figure out, are they also doing the same thing? Or are they going against me? I actually like that. If you're a long-term trader, your primary trend, your daily chart is up, and then your hourly charts are down, that's good. Because you want to find a nice support and then just go buy at that nice support. One thing about the trend is your friend. Everybody says the trend is your friend. But the trend is your friend, especially if you're in a counter trend. Okay, so let me just do this quickly. Say this is your daily chart. Trend's up, right? You want to be in a situation where the hourlies are dropping. Because if the hourlies are going against your primary trend, you're likely to find yourself with a more enviable price point in order to join your primary trend. What I hate is finding myself with hourly charts rising, 4-hour charts rising, daily charts rising. At that point, everybody's bought already that if you join, you might be the last one joining the game. So anyway, guys, we've run out of time. Thank you for joining, and hope to see you next week.